Welcome to Moving Iron with Casey Seymour and Greg Peterson, the podcast for anyone and everyone involved and interested in the business of ag equipment. If you want to understand what trends and market forces are impacting the price of your iron, you've come to the right place. Buckle up, it's time to move some iron.
Hello and welcome to Moving Iron Podcast. This Moving Iron Podcast is brought to you by John Deere. I got Greg Machinery, Pete Peterson on to talk about what's happening in the marketplace. Greg, how you doing this morning?
I'm doing pretty good, Casey. How about you?
Doing okay, man. Doing good. It's fall. You're up where you're at. Getting cool where you're at?
Well, yesterday it dropped into the high 60s. We've actually been rocking, I think it was 89 this weekend up here in Rochester and across Minnesota. So, yeah, I think September was one of the warmest Septembers we've had here, and had a lot of moisture, but it really started to dry out here of late. So, yeah, crazy warm up here.
Yeah, we've had same way. We had a really warm September, and it was 94 degrees, I think, on Friday, and Sunday it was 62 at lows in the 40s. So, I mean, I love that. So it was nice.
40s, yeah. That fit 40s, 50s, low 60s, man. That crisp weather makes this old Norwegian boy happy. So hopefully we won't go right into winter. That's what everyone up here is like. Oh my gosh, Indian summer's awesome and it's nice and warm, but and great for guys in the field. But right into winter's tough. So let's not do that. If you have any pull on that front, let's see what you can do.
Yeah, I'll write my congressman and see what we can get done.
Excellent. That'll get her done. I love it.
Consider that they're not working right now.
Yeah, they have their. Hey, we could go political with this conversation. That would be interesting.
I swear, it's the most ridiculous thing on the planet to watch these two people. These people sit there and talk about the stuff they're doing, and
yeah. But what they all need to do, Casey, they all need to come with us out to a nice auction where there's all kinds of people, Republicans, Democrats, right, left, and all different kinds of, yeah, it's just let's just go talk to people. And then it's like, well, what do we have to do? Then they can talk about it. If you don't talk about it, things won't get done. So they need to come out with us to an auction, have a piece of pie, and get to work.
No kidding. The only group of people on the planet that, you say something, Greg, so you're my enemy, right? Because you're on the other side of the aisle or whatever. And
yeah.
If you said it, I can't agree with you, right? It's so petty. That just wears me out to no end.
Yeah, it's our culture is in a tough spot. I think honestly, with social media and our cell phones, we've been living in this petri dish for 15 years now, but especially the last 5, it's just ramped up, and it's hopefully we'll kind of realize that those algorithms are super powerful. I mean, what they do is incredible, but they split us, and there's money to be made in splitting us for not just on politics, but all kinds of things. And it's those algorithms aren't really good for our souls, and so we need to use technology for what we can, which obviously we do with our Machinery Pete business. Hopefully, we can help farmers and dealers bring them together, find what you want, make a good deal. But put the phone down in the evenings and talk to your wife, talk to your kids, talk to your neighbors. And that's kind of how humans were meant to interact. So that's my sermon for the day.
Yeah. I look at social media. So I have an old black lab, and she's 12 or 14 years old. She's old. But every once in a while, not so much anymore, but when she was younger, she would get in the kennel and you would think she was going to, if you let her out of that kennel, she was going to go kill somebody. And as soon as you open that gate up, she was the nicest, sweetest dog on the planet, right? And but whatever dog she was barking at, whatever, she'd go walk over and be, hey, it's so nice to meet you. Glad you're here, and all this stuff. And then that's social media, man. There's someone that's acting crazy, but if you put them in front of a real person, and they completely change their attitude. And that's unfortunately that's the world we live in, where politicians do the same thing, and it's not.
Yeah, the division and fear sells, and it makes money for politicians. There's actually, I live in Rochester, so Mayo Clinic here. I'm not a medical person, but I hang out with a lot of friends that are. And if you, as a human, there's little reactions. Dopamine, basically, in the brain, a chemical is released when certain things happen, mostly just good things in your life. but we get little dopamine hits when we're on social, and that's the algorithms put things in front of us that we agree with and get us stirred up. Yeah, yeah. And it's really, like I say, we're 10 years into this experiment, and it's not good for us as people. But I find hope, Casey. I think more young people actually, like our daughter's age, they're in their low 30s. They're starting to realize, like, you know what? I just don't feel great when I scroll all night, so I'm just not gonna do that.
Yeah.
And I think it's harder for people our age to catch up to that and go, oh, but we'll see what happens. Hopefully, people just like you say, people just need to start talking to each other, and then we'll always have problems and disagreements, but if you can talk about it, then we can move forward.
Fun drinking game called. I play this game every once in a while called Train Your Algorithm, and I just pick one thing, and sometimes it's usually something for Easter,
Yes,
and I just like keep just bang it, see it until my entire feed is filled up that. So I've done that with my friends before, where we'll do that, and we'll see who can get their feed full of the most crazy thing they can come up with fastest.
I love that. That's
Yeah, that's
yeah, that's proof of what we're
yeah,
talking about here. These algorithms, and they're amazing, but they're just as good as AI can ever get. And it'll
right.
never, ever, ever approach what a human being can do or think or feel and produce creatively. So, but tech companies will keep pouring billions, and there's a lot of good that comes out of it. But I love that drinking game. I'm gonna have to try that. That's awesome.
5 or 6 people in the same room and be like, all right, we're all
You
gonna pick
need
the same thing, and then you got to fill it up the fastest. Go.
you need to brand that, Casey. Moving iron drinking game algorithm. Yeah, that's crazy.
Yeah, yeah. Well, I'm sure people that are listening to this or want to hear us keep talking about stuff we're talking about, but we better jump over and talk about some stuff going
Yeah,
on in the marketplace.
yeah,
Greg, as you're looking at the auction market right now, we're seeing some stuff come in. We've talked about a fairly active auction market moving up to this part of the year. We're seeing some stuff out there. You had a couple stats that you were sharing before we started recording, but Greg, as you're looking towards the end of the year, there's no lack of auction activity happening right now.
yeah. Very busy, Casey. Just ran some numbers through the month of September compared to last year. Just the raw number of auctions. Our data shows up 14.5%, which I think makes sense to us given just another year of belt tightening we're in here. So we're seeing more auction events. But interestingly, I also ran some numbers through the end of September, looking at the raw number of 0 to 3-year-old units by equipment categories versus last year. Now, thing to remember here, last year in 24, as we've talked about often, was our dealer friends were the most aggressive I've ever seen collectively last year in terms they're trying to get out ahead of the issue of, a lot of late model used inventory on their lots. And it was the biggest push I've ever seen. And so this year, even though the number of auctions is up 14.5%, for example, the number of 0 to 3-year-old 300 horse plus tractors is down 60.7%. The number, if you go 175 to 300 horse, you're down 62.2%. If you talk combines, 0 to 3-year-old combines down 54.5%. So to me, I think we've touched on it, but I felt like 2024, the real squeeze, the pressure was on the dealer front. And in 2025, it shifted to farmers. And, we're seeing more stories in the media and just a lot more discussion about, soybeans in particular. And of course, our friends down south with cotton, they're really difficult. And so I think the rest of the year, I sort of hate to say it, but I think we're going to see the increase in auctions continue on into early 26.
Yeah, and I think you're right. I mean, what's going on in the auction marketplace and how those are stacking up, there is some forced liquidations, right? That continues to be a bigger issue than what we've seen, and you're starting to see a lot more of that stuff pop up. And unfortunately, I feel like that's going to be a big push going through the end of the year on those forced liquidation side. at the Moving Iron Summit 2 weeks ago, almost now. I talked to a lot of guys, and their big concern was we're going to have one more dealer. These dealers are going to come in, and we're going to start seeing these huge liquidation sales and those kind of things. And I probably had that conversation with 4 or 5 groups of 10, 10 guys, just kind of what they were seeing happening. And when they would say that, I asked them, like, are you planning on taking stuff to auction? Like, well, no, I'm not. And I'd go around. Nobody in those groups are going to take anything to auction. And I guess as you're watching that, 2 things. One is the big liquidation sale. If those were going to start coming to fruition, you'd start seeing those conversations, those sell bills, those kind of things would start popping up. And we start seeing some of that thing. Not to say that you can't see one pop up here, but we're in the, what's today's date? The 7th of October right now. So it's not like someone's going to try to put one of these things together in mid-November for December. They could, right? But it's not like you would see that happen. Typically, you don't see that kind of movement on that. The reason I'm somewhat bullish about the auction marketplace is because of the type of sales that we're seeing push through. We've talked about this, but it feels like as those farm sales and those kind of things happen, the pricing of those auctions are typically higher than other things. So it's keeping that auction price up. Retail price is coming down, so you're seeing this like a bigger equilibrium in the marketplace right now. For as bad as the economy is, and when I say bad, it's not like it's continuing to fall, but it's just not getting any better. You know what I mean? So you have this stagnant movement of the marketplace, right? Where it's not getting any better, it's not getting any worse. You just kind of stuck here in the middle, right? But to still see the auction activity that we're seeing and the prices that we're seeing, it feels like we're at the bottom. I guess, Greg, as you're looking at this, what are your thoughts on that? Do you feel like we're at the bottom? Do you feel like we're working our way out of the bottom here?
Well, I've got some data that would support that thesis, Casey. By the way, I apologize for our 2 dogs barking upstairs. We got some a little work done being to the wood floor. Machinery Pete has no game working on the wood floor. So anyway, but yeah, let's look at some average auction price data on combines. Very common late model rigs, like take a John Deere S780. So this year, so far up through today, average auction price $268,969. So basically $269. Now last year, that average auction price was $275,500. So you're talking about a minimal drop here in an environment like we talked about that's very difficult. But again, last year that was that big dealer push. Now if you wind that back on S780s, the biggest drop that I saw was from 22 to 23. They went from basically 355.7 to 294.5. So combines were a year ahead of tractors. But yeah, I'm kind of seeing the auction price data. It's like we talked about, footing is the word that I've been saying here since February. And it surprises me a little bit. But again, it makes sense. More of these auctions, they aren't these mass sales where there's 40 combines. And you're right. I don't see on the horizon a ton of big dealer sales like that. We're seeing a lot of innovative auctions with dealers, like our friends at Rich and Rich down in North Carolina. They have a sale this Saturday. It's three Case IH dealers all chipping in some equipment, and so you see things like that. But I think, like you said, on the farmer side, unfortunately, there's liquidations. I'm starting to see more sales of, it's basically to stop the equity drain type of situation.
Right.
And the average age of the farmer is older than I'm almost 60, so they're older than me. And if you've had 2.5 years of like, ugh, and you're looking ahead, I mean, maybe some good news will come with China soon and soybeans will pop up. But outside of that, it's again this equity drain. And really the one other factor, I just wrote about this for Farm Journal in a column too, Casey. The one factor that's new that I'm kind of worried about is, and it goes back to our social media conversation, how things are so negative. So I always felt that even though politics were becoming more split, that one area where both sides would at least kind of go, hey, yeah, was agriculture. We support our farmers. And now what I'm seeing is bailouts are being discussed in whatever shape or form, however you feel about it. the out and out negativity uh, aimed at agriculture is, I've never seen it this big. I was worried about this last time back in 18, 19, but this time it's like 100x more. And I think if you're an older farmer, you can ignore a lot of that, but even if you try to ignore it, it doesn't make you feel good. So that plays into your decisions. You're 75 years old. Like, now that's what I'm starting to see. The number of auctions again up almost 15% and increasing. I think to stop the equity drain and all the negativity, I think more folks are just saying, well, now's a good time. Maybe I'll hang it up.
Yeah, I think you're exactly right. We're seeing more and more movement across that spectrum on the consolidation side because if you're 65, 70, 75-year old farmer and you've been doing this whole life and you don't have someone coming back into it, excuse me, going back into it, farming is not a job, right? It's a lifestyle. And I think that's the thing about this thing that you're doing. It's like your entire life is based around the farm that you farmed for 50 years or 60 years or how long it's
Your
been.
dad, your grandpa, your great grandpa.
And everyone's done that thing. And it's so, as you watch this kind of thing come through and, you get in these kind of philosophical debates with folks about stuff. And my response to this stuff is like, farmers get all these bailouts and those kind of things. And I'm like, yeah, and I don't, there's no part of me that has ever looked at that as being something that's wrong or bad or whatever else, because I don't want 5 people making my food. Like there's 5 people that make the gasoline that go in my car. You know what I mean? You want to have that security of the food, of where your food comes from, who's growing your food, how many people, the competition associated with that, those kind of things. You want to have a strong, secure food space, and I think if you start looking at it, and you just kind of throw that out to the window, you're asking for trouble, and I don't. That's not something I want to have trouble with. You know what I mean? I think that's one of those situations that you need to have as many farmers as you can have, and every year that number drops. Think 30 years when you started doing this, how many farmers were out there farming and all the information.
Yeah.
Where we're at today, it's about half of what it was. It's continued to shrink.
Right. Yeah. For sure. Everything you said is truth. And it's, again, back to the world we live in, that truth, doesn't stop a certain percent of people from, just blaring on social media about their thoughts. It's just this negativity, which I think even if we try to ignore it, like my advice, just put your phone down at night and stuff, it just kind of wears on you. And particularly now we're stretched this out and people just want to see some hope, I think. Is there any ray of sunlight for commodity prices to bump up a little bit? Farmers just want markets. They work their ass off and put everything they got into it to feed the world. And this stuff's out of their control and it's frustrating. And again, and then I look at data. So again, it's such an interesting mix right now. Again, I think the pressure has shifted onto the farm side right now. And, I think that's why the number of sales are going up. But at the same time, again, those values are holding. So it really is a highly interesting year here, 2025. And coming down the stretch, on the dealer side, if I were a dealer, I would look at these, an example. So on last Wednesday, our friends at Big Iron, who I think they were down with you in Moving Iron, Kurt and those great people. Yeah, I've worked with them for many years. They're awesome. But they had a sale last Wednesday. I think our friends at 21st Century out your way in Nebraska had a couple tractors on the sale that I was watching, late model tractors. Let's see, there was a 23 model 6R 155. Nice rig, no loader, 693 hours. It sold for 167 and a quarter. Now, if you go to machinerypete.com, punch up our auction prices, 6R 155s, and then filter by 500 hours or more, what you're going to find is that 167 a quarter is the second highest auction price ever, over $500. And this one had almost 700, and it had no loader. The only one ever sold higher at auction was it was back all the way back December 4th of 23, and we know December has tended to be, was the best time to sell. And that was a dealer auction, Steffes Group, I think for Kibble Group out of Larchwood, Iowa. They had a 22 model, 561 hours with a 640-hour loader that did like 177. It's the only one I've seen higher. So that tractor, the 21st Century, sold last Wednesday, hard cash wise, that did really well. So if I'm a dealer, and I know 24 was painful and there was huge losses, but what we keep talking about, this footing, that's why, again, maybe not having a huge sale, but maybe streaming out 5 tractors on this auction or 2 on that one. I think that's what I'm seeing dealers do a little bit. Whereas last year it was just like, whoa, the spigot was open and the stuff was dealer items were everywhere.
Yeah, for sure. Yeah, it's different marketplace, and auction stabilized, retail prices come down, so we're getting a good stable market somewhere. So gotta keep working out through it, and we're gonna come on the backside of this. But unfortunately, I feel like it's going to be a long, first 9 months of 2026 before we really see.
Yeah. I think I'm curious to get your take, Casey, on the used equipment market and maybe even towards new sales. But let's just say government president or whatever, they can kind of send an aid package farmers' way, and say it's a good size one. I don't know that magically changes farmers' mindsets so much. I think I don't know. I'm just curious to get your take in terms of, you think we have a spike in used values or new sales? Or I would say I wouldn't see the spike, but what do you think?
I don't think so. I think that money that DC come from any big package that comes down, aid packages or anything like that come down, is going to go first. They're going to shore up whatever they just shore up with, any bankers, those kind of things, get some equity, build back up with some stuff, and then inputs, and then whatever's left maybe trickle down to the equipment side. But I think anything that comes from this I don't remember, last week or something like that, President Trump was talking about sending an aid package because of the amount of money they made off tariffs, and they're going to share all that stuff, whatever. I don't see any of that making its way to the equipment side of the business. I see it going to. Now, I guess it depends on if it's taxable or not, right? That also have a big thing. If it's taxable, paying down debt, there's some tax advantages there. There's some stuff he can do with that. There's some stuff he can do, but hardcore like taxable, benefits as far as write-off, obviously inputs, and obviously Section 179 on the equipment side. You can see some peak there, but man, I'll tell you, I don't see a lot of people having an opportunity to take advantage of that. They're going to have.
Yeah, it's kind of towards keeping you whole and keeping you floating along. I think though it is interesting because we talk about this footing that it's basically been here since February. That's just the straight facts on the hard cash auction. Like I say, on those S780 prices and right on down the line. So whatever help does come, I mean, should work towards solidifying the footing for a period of time. So, but yeah, we'll see how it all plays out. But just interesting days for sure.
For sure. All right, Greg, probably a good place to stop. Folks want you to come talk or speak at their event or come by their auction. Best way to do that is go to the machinerypete.com website, go to the contact page, and hit you up there.
Yep, call our office. You'll get Ann or Dan or Sean or Jim, our great folks there. And I love coming out to auctions and events. So just hit us up or hit me on Twitter or whatever. And always great fun to get out.
Right on. Well, Greg, I appreciate you being on the podcast. We'll catch you again next week.
You bet. Have a great week, Casey.
Stay tuned for more Moving Iron podcasts after these messages.
Looking for more accuracy, more productivity from your current planter? Let's get exact with precision upgrades from John Deere. Start with Exact Emerge, and get accurate singulation and spacing at 10 miles per hour. Or choose Exact Shot to promote early root growth and cut fertilizer costs. And with Furrow Vision, save time by verifying seed depth right from your cab. Visit johndeere.com/planner upgrades and see why nothing runs like a deer.
Get the latest markets, weather, and rural news whenever it works for you. Farm Journal TV is on Roku, Fire TV, and mobile. Try it for free for 14 days and take ag with you everywhere.
All right, welcome back to Moving Iron Podcast. Mark with Sean Hackett. Sean Hackett is with Hackett Financial out of Boca Raton, Florida. It's nice enough to come on and talk about what's happening in the world of commodities. Sean, how you doing this morning?
Well, I'm doing good, Casey. Always enjoy being on the show.
I love having you on the show. All right, so we have government shutdown. Supposed to have a report this week. Obviously, that's not going to come out. I guess, Sean, as you take a look at this, this is the report that I was really anxiously waiting to see, right? Because they should have. I mean, the debacle they had last week, where they found another 10 billion bushels or whatever, like in some closet someplace in the USDA. This would have been the report that would have come out and said, "Hey, we're starting to see some decline in yield." I guess, Sean, so as you look at these situations, it's not your first government shutdown you've been through, right? So I guess as you're looking at these kind of situations, what are some of the things that you pay attention to during this time frame, and how do you think speculators react to these kind of situations?
Typically, when we have a lack of data, whether it's USDA data or economic data, speculators tend to be a little less active, a little less conviction. We can say all we want that the USDA numbers and the government numbers, Bob's numbers, are so inaccurate that we really shouldn't pay attention to it. But the reality is that they do. And because of that, it means we're going to have quieter markets for a little while, Casey, without the USDA putting out numbers. My suspicion is it looks like we're going to get the government open here sometime this week. Just looking at Trump saying they're going to negotiate the Affordable Care Act or something. And so I think we'll get the government open sometime this week. My suspicion, if I had to guess, they're just going to cancel this report and they're just going to come out with the November report. It's an easy way for them to have to say anything. The history of quarterly grain stocks reports, by the way, that came out last week where they magically found a couple hundred bushels of corn. It's one of the most inaccurate reports that they put out, and they're inaccurate in just about everything they put out. But it's one of the most inaccurate reports. Constantly wrong, constantly misrepresentation of the truth. And so you can't believe anything that they say in that. There is no more corn out there than there was the day before that came out. And there's but the market reacted to it. But when you really look at it, prices are, they got hit and then they kind of came back. And then I think the market actually calling a bluff. So what? Doesn't seem right. Demand isn't going to be underperforming at these low prices. It's going to be overperforming. So anyway, it just really sucks because we got this baloney report that hurt the market. And now the report that's going to start putting actual harvest results in agronomy into the report that historically has shown much more significant knockdowns in yields where the yields should come down, we're not going to see. We'll eventually get it. Last year they really dropped their pants in January. They'll eventually get to the truth. All the evidence from my customers, from my work says that the yields are going to come, substantially down. My suspicion is they're just going to cancel this report and wait for November, wait for more information. And then they can juggle the numbers again and come up with whatever they feel is appropriate at the time. Bottom line is carryouts are going to come down and down and down. And I believe at the end of the day, when we're done with the January report, we'll be sitting with carryouts of corn in the U.S. of about $1.5 billion, plus or minus 200 million, depending how they juggle the other numbers. And we'll be sitting with 230 to 250 million bushels of soybeans, plus or minus, 30 or 40, depending how they juggle the numbers. That's where I think we're going to wind up. What does that mean? In my opinion, it's an $11, maybe $11.50 soybean market on the nearby, and I think it's a $4.80 to $5 corn market in the nearby. Let's say by the first quarter. That's where I think the appropriate price would be coming to that ultimate carryout. Then we, of course, Treasury Besant's team will be meeting with the Chinese in mid-October for the supposedly going to be the final trade talks to solidify a deal ahead of Trump and Xi Jinping meeting at the end of October at the Korea summit. So I think it's highly likely we will have a trade deal and there'll be some definitive quantities of corn and soybeans and wheat and cotton that will be committed to being purchased. And I think, as always, Trump and Bessent and Letnick will probably throw out some ideas of what that looks like before it's actually signed. So I think the market's going to be, there'll be some speculation of a trade deal and going from zero on soybeans to something more than zero. And that should be hard to quantify what that means for price because we don't know how much they're going to purchase, but it should be, I don't think we'll agree to something that's not enough to affect the market enough that it should be significant. And it should offer, between our crops getting smaller and demand from China getting larger, there should be a good selling opportunity, Casey, move from here into the first quarter like there was last year. There should be a very good selling opportunity that when you look at your operation and you look at your costs and you look at everything, you say, I can make that work. Sub $4 cash corn isn't going to work, but I think if we have a $45 corn market, it's not going to make you rich, but it works enough that that's something that there should be that opportunity. And so we're going to just be looking for signs when we get there. And then the last thing is, my understanding is on November 5th, the Supreme Court's going to hear about the legality of Trump's tariff policy. And supposedly they want to make a quick decision no later than before Christmas time at the latest, but could be even later in November before Thanksgiving, on whether or not the tariffs are legal, or if some are legal and some are not illegal. My best guess is they probably will say some of the tariffs have overshot, but some of the tariffs make sense. Anything that causes a universal backing off of some of the Trump reciprocal tariffs on every country would be a massive positive bullish tailwind for all commodities, not just grains, all commodities. So I don't know how to quantify that, or I don't know how to gauge that. The chance of them saying some of the tariffs aren't right, I think there's a pretty good chance they're going to say some of the tariffs you overshot. I don't believe they're going to get rid of all of them, but I think to say, some of them we get, makes sense. You have the right to do it, but some of them, come on now. They want to get a little carried away. That's what I think they're going to say. And that'd be crazy bullish. So that's an additional bullish factor after a trade deal might be signed with China. So that, and on top of obviously watching South American weather, and do we get some issues to worry about once we get into mid-November onward? We'll see. But I really feel that the risks and the odds favor upside price risks at this time in grains. And if I was a producer, I certainly be penciling in how much I want to sell when it looks like we're reaching a peak heading into the first quarter, how I want to do that. And if I'm a livestock producer, or I'm an ethanol producer, or I'm a renewable diesel producer, looking at where prices are, I would be adding some cash coverage here with all that in front of us. I just think it looks pretty promising to me, on grains at least, and cotton for that matter,
Okay. So my neck of the woods, we're digging sugar beets right now. So take a look at sugar. Well, first, before we get to sugar, let's talk a little bit about South American weather. You've been talking about this for 6 months now, that this was going to be another dry fall, spring for South America. And as you're looking at this whole scenario right now, it's not stacking up to be a good run for this second crop of corn here, or this planting season for corn that we see right now. As you're looking at this, Sean, what's your thoughts on South American weather?
Right now, it's all about soybeans, because all we do is plant the first crop corn, and that doesn't really matter. But for soybeans, because we have this sudden stratospheric warming event that's still ongoing, by the way, above Antarctica, that has caused a negative Antarctic oscillation. All the models have been too wet. All of them call for all kinds of rain in late September and October, and it's just they've kept backing out and backing out. And I think it's going to continue. Doesn't mean there's not going to be any rain, but it just means the rain's going to disappoint. For coffee and for sugar, this is mission critical time here in the month of October. If the rains really don't deliver, those crops are going to have permanent, irreversible yield damage. That means not yet. You really start worrying about soybeans, at least in the center north area where they grow most of them. You really start worrying about that from mid-November onward. So right now, what you'll be watching is planting pace. How fast are they getting the crop planted? How does the crop look even some of the crop that's gotten planted because it's been so dry. That's what we just think of it being like mid-May right now. It's hard to worry too much in mid-May, but then you get to mid-June, you worry a lot more. So now for second crop corn, obviously we plant that in February, and we would be thinking about what weather might look like then. And if you look at what's going to be happening here, Casey, we're in a temporary borderline weak La Nina construct right now, but it's going to be very brief. The Southern Oscillation Index is not supporting this, going to last very long. By the time we get to November, we're going to be back into neutral negative. But by the time we get to January, we're going to be in a neutral positive, possibly, it's possible, borderline weak El Nino. And that's super dry for the northern and central west Brazil second crop corn areas, especially Mato Grosso. So that's what we'd be thinking about watching, is to see, if an El Nino pattern were to really develop here. Too early to, obviously way too early to worry about that yet. But that's what the models are very consistent on this. The statistical analogs we follow, which we believe is better, also agrees with the models. So I think it's a pretty good bet that we could have a lot more trouble with second crop corn this year. And if the dry weather that we're having in the northern soybean belt leads to a delay in planting and a delay in the maturation of the crop and a delay in the planting of corn at a time when we have dry weather, there could be something to worry about in corn as we get into the February, March, April timeframe. Obviously, still it's not going to impact the market today, but we're always trying to look far ahead and give our customers and your viewers kind of a little bit of a benchmark, some signposts to follow and watch and monitor the closer we get.
All right, so we're talking about sugar real quick. Sugar is sugar beet harvest in most parts of the world right now. If you're looking at where sugar's at, you see some movement there, Sean. As you look at the sugar market, your thoughts?
Well, we've had an incredibly wet finish in India, sugar areas, like just record rainfall. And when you have rainfall near the end of the crop cycle in sugar and you're getting ready to harvest, what happens is you lose your sugar content. It reduces the sugar content. And so what happens is that, for every acre that you harvest, because the sugar content is less, you get less sugar output when you process it. And so we're certainly seeing that situation in India, which means a crop that looked like it was going to be okay is now going to be considerably below expectation. And then, of course, we've had a couple of typhoons hit southern China where they grow almost all their sugar as well at exactly the wrong time when they're trying to get ready for harvest, reducing sugar content. And so, the sugar cane is there, but the sugar content has been rinsed away, as they say, by the excessive rainfall. And so their sugar is going to be off. And then, of course, we know where they grow sugar, which is central south Brazil. In Sao Paulo is where they grow most of the sugar in Brazil. Driest ever. And we just talked about it. Looks like it's going to stay dry and be similar to last year and just not allow for very good crop development. So sugar has multiple prongs of issues and problems. Its market's starting to react. I think it's already up maybe 10% here in the last couple of weeks on some of these worries, and I don't see these problems going. The rains have fallen. The sugar content's gone. You cannot get it back. That's permanent. Obviously, the sugar crop in Brazil remains to be seen. We could get some rains, but it does not look like a good start, and the sugar content is been irreversibly damaged in those two key countries. And so I like the prospects for sugar here. It looks to me like sugar's made a low and is reversed and has a pretty good outlook into the end of the year based upon those factors.
Okay. All right, so you talked a lot about how harsh this winter is going to be compared to ones we've seen in the past. You have another data point that popped up that points to an even more accuracy on that.
Yeah, on top of some of the factors we've spoken about before, cold North Atlantic, warm North Pacific, kind of a neutral negative type of ENSO. Another factor that can significantly weaken the polar vortex, which is what's required to have a cold winter because that cold air gets displaced further south, is very high snowpack in Siberia and snowfall. And if you look at what's happened and where we are right now, we have the highest snowpack in Siberia in 23 years and the fourth highest snowpack since the 1970s. And when you have a high snowpack, the cold air that it produces above it weakens the polar vortex over the Arctic, and is another teleconnection that whenever you've seen Arctic snowfall be this high, Siberian snowfall be this high, it has produced much colder winters. So that by itself would say, we're going to have a top 10 cold winter. Warm North Pacific, that in itself says we're going to have a cold winter. A North Cold Atlantic, that by itself says we're going to have a cold winter. But if you have them all combined together in synchronicity, that's how you get a top 5. Like, all these say could be top 10, but to get a top 5, you have to have a confluence of factors. And it looks like we're going to get all 3, 4 really, because of the ENSO being neutral negative. Looks like we're going to have all 4 this winter, which means, top 5 and, could be, top 3, depending on exactly how things play out. And so that's really what we're expecting to see. Remember, we just talked about how we're going to be moving into a neutral positive, maybe a weak El Nino here into the January, February, March timeframe. And that means lots of snow potential in the back half of the winter. Lots of snow potential. El Ninos are wetter patterns in the atmosphere. And if you have the cold teleconnections and you have moisture in the atmosphere, you have the chance for some epic snowfall, which could be an issue, especially if we have some big epic mid-late March snowfalls. Could be an issue for flooding in the spring on snowpack melt, and could delay plantings, especially in the central north, because it's going to take a while for that to go away. And we saw this happen a few years back, and it was a mess, and would almost immediately take top end production potential off the table almost immediately. Doesn't mean major crop problem. Just means top end crops not possible. We start from there, So that's what we're looking at, and this snowpack, which you can't necessarily predict that in advance, and we didn't try to predict that in advance, but we certainly can monitor it, and if it signals the signal, if it verifies, which it has, we put it in our tool chest, and it gives us more confidence about the forecast ahead.
All right, Sean, good stuff as usual. Folks want to reach out to you, get more information about what you're doing at Hackett Financial. What's the easiest way to do that?
Our website is Hackett, HACKETT advisors.com. We have a Twitter page at FaradX11, LinkedIn page. We do put some stuff out from time to time about our cycle statistics and correlations to keep people abreast of what we're up to. And that'd be a good place to go to stay on top of what we're thinking. And for those that watch your show that might get value out of that type of analysis.
Well, Sean, we appreciate you being on. We'll catch you again next time.
Sounds good, Casey. Look forward to it.
Stay tuned for Moving Iron Podcast after these messages.
Well, there they are, mocking you.
See you next year, loser.
That weedy area that's got you thinking, man, I hate that spot. Wish I'd sprayed better. Get the last laugh with a sprayer upgrade from John Deere. Precision upgrades that can increase your sprayer's performance, like Exact Apply, advanced nozzles to give you more control at more speeds. It's just one of the many precision upgrades you'll find at johndeere.com. Now, let's see who's laughing.
Get the latest markets, weather, and rural news whenever it works for you. Farm Journal TV is on Roku, Fire TV, and mobile. Try it for free for 14 days and take ag with you everywhere.
All right, welcome back to Moving Iron Podcast. Got Aaron Finn on, talking about what's happening in the market. Aaron, how you doing?
Hey, everybody. Pretty good. Pretty good. Things are, it's quite chilly on the high plains. We've hit a snap, if you will.
It went from very...
It was 94 degrees on Friday, and I had 30 on my phone at 5 a.m.
Yeah, it was...
That's not... I mean, that could be the same day out here, let's be honest, but...
I have a TV outside on my patio that I watch during the warm spells, during all summer and most all fall, and I was sitting out there Sunday night watching the Bills play, and I had to go inside because it got cold enough. So I was like, I should really get another layer on. And it's fall, and the thing about this fall though that we haven't seen in a long time is, well, really all of August and all of September have been very wet.
Yeah,
and it's amazing how much rain we've gotten this late in the year.
I will say this: August, by and large, August for being August in this part of the world was wet. I feel like it never rains in August. We always get one little bit of something in September. Sometimes it's snow.
Sometimes that is snow.
More than one time it's been snow in the last 20 years. So, but I will say this, until we had this like last inch, and kind of like everywhere got 3/4 to 1.5 inches, it was a pretty good soaker across the whole handle, talking to guys all over. But it was starting to get a little powdery right before we got this. The reason I equate the reason, because let me back that up. I equate that reason to the fact that September was pretty warm.
It was.
You know, we stayed up in the 80s the whole time, had some 90 peaks, and we didn't get any moisture, so that kind of cooked out what August gave us. But now we're back in it and nice and moist, which is beautiful timing. I laid down like 4 loads of White Rock on Friday, and then we got that nice rain. Oh, goodness, it's beautiful.
Got it all cleaned off. Now you're in the game.
Now you get to go play the tractor some more and re-level it.
Yeah. So very different time right now. So with that being said, you know, we're digging sugar beets right now, and if you look where that's at, you look at, we got some forage harvesting slow, kind of winding down where we're at, and then you're starting to see we'll be picking corn here for too long.
Having been to I-70 and back yesterday, I would say we're in the peak of the ensilage world.
Yeah. Of the what world?
Ensilage.
Oh, ensilage. Yeah. Yeah. We have so I drove. I'm up here in Wisconsin, up here by Milwaukee, and I drove all the way across. Well, basically.
Why are you in Wisconsin?
They have we went to so drove all the way across I-90 in South Dakota, and then all the way across Minnesota, and then basically across Wisconsin to get to where I'm at here. And there is a lot of work going on in the field right now. You've seen a lot of things happening. I saw guys picking or cutting beans, and guys picking corn. I've seen guys see some milo action out there on the way across I-90, and I saw a lot of forage in Wisconsin. So we're you know, it's that time of the year, plenty of stuff going on, and this time of the year also brings a lot of folks to start thinking about what it is they're going to do. Really what they're going to start doing towards the end of the year. And as you start looking out there right now, you know, I have a call with a guy that calls me every quarter and asks me some newspaper or something that they do. They talk about what they're doing in a specific part of the world and what you see happening and those kind of things. And I didn't really have my report from this quarter, how I think this quarter is going to work out compared to what last quarter was. Didn't really change any. It's still not good, right? And it didn't get any better, didn't get any worse. It's still there, right? And you know, as you watch, so one of the questions you asked me was like, do you think Section 179 is going to, with the how they've redone that, do you think it's going to have any effect on the equipment space? And I was like, no, because in order for that to work, you have to have a tax problem to make that work.
Right. You have to show income for that to go into effect.
I was like, it's just not. I mean, there could be some of that stuff out there where some people could make a decision on that because it's gonna drive down, you know, everything on their end to a significantly lower part of their income strategy and those kind of things. But my report to him was like, you know, as you're watching this stuff comes together and how tight things are, I don't see a lot of money going to the equipment side of the business until we get past what we see happening on the finance side with you know, getting guys short up on the loans and equity positions and those kind of things.
One thing, ironically enough, since we talked last week and we mentioned it a little bit about the calf checks, right?
Yep. Oh yeah.
They're slowly starting to get spent. Last year was quite a run, or last week was quite a run on loader tractors. This week, been a lot of calls on loader tractors. I think we're getting to the point where the dust has settled. Okay, we paid down these bills and we paid down this debt and we still got enough. Let's go get a tractor. We're getting into that as we're getting into the tail of the year here. And there's a lot of those checks that are going to be showing up at other places, because the guys got their different selling interval times. So it not to the point of a $7 corn rush, mind you, but there's activity, and you can tell with in the last couple weeks with the amount of things selling that have been especially stagnant this year. A lot of that is driven by it's all fueled by those livestock payments.
Yeah.
So you always have your operation where the planter might have bought, the elevator check might have put in new fence line bunks, and the calf check might buy a new planter. It just depends,
Yeah.
There are still operations that are diversified. Not everybody's crops are livestock. So, and I think those guys are the guys that are the most comfortable and at ease, I should say, just because of their mix,
Well, yeah, the diversified, not where I had the panhandle. I mean, just about everybody has cows, right? I mean, there's few operations that don't have farming operation and a cattle operation to some extent, right? So the diversity that you see there is really changing the way things are, and just like any other time of the year, rarely do you have a really strong grain market, a really strong cattle market. Like those things typically don't go together, right? So it's one or the other. So you're seeing that the subsidy from one is keeping the other one, from the falling off the cliff, and I think that's what we're seeing right now. But that being said, you go to like Indiana or Iowa or Illinois, where it's just corn and beans. That's what you got, and there's not a lot of diversification beyond that. Those are the guys I'm talking about, where you start looking at, hey, we're going to have some opportunity here to get some of the stuff right with the bank and get some equity back and start building those things back, and then we're going to come to the table and look at buying equipment. And I think that's why I'm not overly excited about this last quarter of the year any more than, like, these are the things we absolutely have to have going into planting season. Everything else is going to wait. But I think 26 will be a way different story. But as it sits today, it's just going to be, what do we absolutely have to have? What do we have to absolutely update to get through next planting season? I think that's what we're going to see happen.
Right. I truly think there's going to be some year end. Not rush isn't the right word, but maybe we'll fancy it. Some year end enhanced activity, if you will. And I think that is just going to be nothing more than an extension of what we've seen all year. Still getting combine calls. It's October 7th. Got a combine call yesterday. Sold planters in May. Everything is last minute all year because of the price of the machines and the interest rates and all that. And I think that is the way our year end's going to be. It's not necessarily a tax market. It's the dust has kind of settled, and we know we have to do this. Now we know where we're at to go do what we have to do.
Right.
And I think that is, so there is some year end, but it's not It's not, oh man, we got to go buy this because we don't want to pay taxes. It's, we really do need this, and now we actually know where we're at.
Yep.
And that's something we haven't had to deal with for. I mean, even in the downturn of the teens, we didn't really have that. It was never. I mean, you had your handful of product segments you couldn't give away, but other things were still a trickle. You know.
Sure.
Now, in this downturn, everything is inundated by numbers. Okay, just sheer everything went crazy. When we had those problems last time, it was combines, 24-row planters. It wasn't also sprayers and tractors. This time it is.
Right.
And it's all the tractors. It's 6, 7, 8, 9. It's Puma, Magnum, Steiger. It's all of it. Okay.
Yeah.
And so that being the case, we don't have those little tributaries off of the plugged river that are still flowing. It's just bulging up. Well, every little hole in the dam, you know, you think of a cartoon and guys sitting there trying to do that. Every one of those little holes that show up is actually a huge plus.
Yeah.
I like to think of it like the dam should be a cheese grater. Okay. And all those little streams coming out, as long as that grate doesn't move, we're good. We just got to filter it. You're just kind of filtering it out. As long as there's still some kind of flow, we're good. Because there's only so many guys you can flow, 500, $500,000 combines to? There's only so many places to go. You gotta digest that, if you will. And I think with where we're at in this market versus that mid-teens one, that's our new digestibility pattern versus where we were. The other thing, our market is an aging as far as the biggest segment of purchasers, and that biggest segment is by far the biggest segment. As they age, as they phase out, a lot of those guys that were there to help in the teens aren't there anymore. And the machines cost twice as much. So it's a whole different thing that we're digesting through, but it is starting to digest.
I hear what you're saying, and it makes sense.
I just completely disagree with it.
I mean, your cheese grater analogy was I'd never heard anyone use a cheese grater as an analogy, but that was good. But they had something I disagree with what you're saying, but I think you said one thing in there that I think makes a lot of sense, right? There's a limited number of people that you can sell $500,000 combines to, right? And that's true no matter what the market is, right? One of the things that's dragging down the marketplace as well is that there's a limited number of customers across the entire spectrum.
Exactly.
That are coming to tip now, right? And as you go down that down the trough, as you keep rolling down the end of the trough there's just not many people coming to the table right now to buy stuff because
you're right. It's not just the 500. It's okay. One 500 makes two 300s. All right. Now you got to find two guys. 2 3s make 4 150s. You know, you're out guys in each segment. So it's a numbers problem all the way through.
But those numbers, instead of, I would say at the top end of your funnel, there's probably more people at the top end of your funnel than there are at the back end of the funnel because of just how it's an inverted sales funnel. Right?
Correct.
Right. Because these guys now, that being said, if you go look at where 10-year-old tractors are selling for and 7-year-old tractors, that range, they're selling like hotcakes and they're selling fast,
right? Which
is also indicative of the time that we're in because when you're at the bottom of the trough, those typical machines typically sell fast, right?
5 to 10.
But that, if you look at where the flip side of that is like, we had go back, 18 months, and the top end of that funnel was probably a lot smaller people coming to the table because of the price of the used equipment, and it amplified the backside of that funnel with the the $250,000-$300,000 something and less, right?
Right.
Now it feels like that's kind of flipped around a little bit to where there's some more people looking at the higher price stuff because the prices have come down from $700,000 to $600,000, $550,000, something like that, right? You're seeing more of that kind of stuff come into play. So there's some more people that are saying like, hey, this is a value now, and I think that I'm gonna take a look, and whether I buy anything or not, I'm gonna at least take a look at the stuff over here, and then start working our way down. The stuff on the other end of that spectrum, it just feels like the guys I've talked to around, especially about the moving iron and stuff like that, they were either pricing out 1 to 3 year old stuff or 7 to 10 year old stuff. And the stuff in the middle, no one really talked about that 3 to 6 or 7 year old something in the middle, right? I had zero conversations about stuff that was 3 to 6 years old, but I had conversations about everything on both ends.
Really?
I did, yeah.
Because my personal experience is that as far as the producer segment of my world, that is what I probably get the most activity on.
And it probably could have just been a functionality of, hey, we're really focused on this stuff up here on the top side.
You're right.
You know what I mean?
Yep.
And I'm shocked how much we can't keep a $100,000 tractor in inventory. I can't imagine how fast that stuff sells. And it could have just been on both ends of those spectrums, and that's why we were talking about it. But typically when someone you say tell them how things are, I'm heavy on this, heavy on that, kind of somewhere in the middle here, kind of things moving around. Nobody brought any of that up.
Right.
That's what was shocking to me. So.
No, that is. I'm honestly a little surprised by that too, because I would say earlier in the year, 100% with you. The 3 to what we'll call 3 to 7, which is usually like, regardless of market, bam, bam, bam. Good market, they're going CB. Bad market, they're AB. That stuff is usually bang, 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 and that's what was piling. Yeah. That's the stuff piling up. The very fresh trade, it's leaving because it's adjusted. It's more correct in this market. The other stuff wasn't. So once you get to where, okay, well, here we are, we gotta adjust what we're doing. Once that hits everything, then you're back into that 3 to 7 red hot. And dear God, not any stretch of the imagination is it red hot, but there is a flow to it.
It's all relative at this point.
It's not a stagnant farm pond.
Right, exactly. Yeah. So kind of watch those things play out as you look towards the end of the year. And I think there's going to be some buying opportunities. I think there's going to be some selling opportunities, those kind of things. But unless we see a huge move in the price of corn through harvest, right? When I mean huge move, like $1, right? That's going to be, you're not going to see a lot of people come in the year being like, hey, I need to go buy something. You're going to have those guys for sure, but it's just not going to be. There's just not enough activity out there right now to make that needle move that much.
Okay, here's my question to call you on the carpet, buddy to buddy. Nobody watching, listening across the country. Don't worry about it. Just you and me hanging out.
Just the tens of listeners that are out there.
Just us and our moms. Okay. Yeah. How much increase to the price of corn is it going to take to have a needle mover? 50 cents? $1? And I don't mean, Casey, I don't mean a needle mover. I mean a needle mover.
Well, if you go back and look at like pre-COVID, 20.
And I have to, just for clarification, I have to ask you this question because of the way my farm pencil works. If I really want that tractor, I can make it pay for itself. Watch this.
the beauty of Excel. They have so go back to I think it's 2018, 2019 time frame. Corn went from 350 to 375, and people act like, oh wow, it's not going to get any better than this, right? And it just took off and ran from there, right?
Right.
I'm a firm believer that a quarter changes the way people look at things every quarter, right? It didn't have to go from 350 to 450. Oh no, 450 now. Let's go buy something. It's like 350, 375. People start making decisions. 375 to 4. Oh my God, this is getting. We're really doing $4 to 425. Those quarter turns up or turns down change completely change the way people think about stuff.
True.
And they're so. Well, a good example of this, right? So if you're go all the way back to like 2012 when corn was $7 for 14 seconds, right? And then it kind of settled back into that $6, $6.25 range, something like that.
Actually, I do know of 3 panhandle fellas who sold corn over $8.
Yeah.
In that tiny little peak.
Yeah. But if you look where corn went from 650 down to 550, that's still huge. It's still a big number, right? You would have thought that the world we're going through an epic, pan depression across the entire world.
You would have thought that dollar was $5.
Right. And I was like, wow, we're still 550 corn. I don't know why everyone freaking out. Oh, right. But flip it around. The easiest way I can explain this to you, I've explained this to my wife this way and my dad this way, is that when you're coming out of spring and you it's 55 degrees outside, you put a pair of shorts on, like, oh my God, it's great, nice outside, right? When you're coming out of summer into fall and it's 55 degrees, you go out and get your sweatpants on.
You're
right?
freezing to death.
It's still 55 degrees, right? But it's just your perception of that 55 degrees on both sides of that, right?
Right.
That is, right? And I think when you look at commodity prices, it's what your perception is, right? Is it 55 coming out of spring into summer, or is it 55 coming from summer into fall? It's still 55 degrees. It's just your perception of 55 degrees is totally different.
And so that makes sense. We've been down in the rut long enough that every quarter now climbing out is a smiley face.
Yeah, it's huge, right?
Yeah.
But when you get to, let's say we get to $5 cash corn and it starts trickling way down to 450, 475, 448, 435,
the sky is falling just as fast as it went up. Yep.
Yeah. And but you were ecstatic to sell it at 435, which I get it, right? I mean, you're going from you're getting $5 for every bushel of corn that you sell here, now you're getting 425. I get that, right? I get the swinging price. I understand that, right? And the profitability and those kind of things. I'm not trying to diminish that, but what I'm saying is, if it's the perception of where you were at, and again, is it 55 degrees coming out of summer or 55 degrees coming out of spring?
Right.
Out of winter. Which 55 degrees are you looking at? And all of that stuff that you have, profitability, I get all that kind of stuff. You start forward contracting and all those things that play into that. But at the same time, I've watched this my whole career, that when even a 10-cent swing in a week, right? You go from $4 to $4.09 or $4.10. Like you see that activity peak up, right? And as you look at like a 30-day, 45-day period, and you see a quarter get added to the price of corn,
right,
or a quarter gets taken away, it completely changes the way people look at the situation that they're in.
I'll give you an analogy. So you ended the week at 409, right?
Yep.
But that's down. Wednesday it did hit 423.
Yeah.
So everybody's pissed.
Right.
Never mind, we're a dime higher, but burned up 12 cents.
Well, think about this. So up until the USDA report last week, where they actually found a couple 100 million bushels of corn they didn't know they had. If you look at where that was at, we were on, we were kind of slopping back and forth, but we were banging around that 425, 427, 422, that kind of thing. report comes out, guts it to like $4.09, and now we're back up to $4.22 this morning or whatever it is. But the call volume going up from, well, if you think about where corn was at 4 weeks ago, it was had a 3 in front of it.
Right.
Now we're at 425, right? And so everyone's kind of, but that call volume that got everyone kind of moving along, kind of got some things kind of going. Things are kind of perking up a little bit, and then for that 4 or 5 day period since the thing, it kind of dried up, right? And the people were like, well, I had my chance, so now I guess I'm going to get it back, right? But now it's back up to where it was. So now you're going to start seeing that psychology. I'm such a firm believer in it. It's not these huge swings in the marketplace that go from like $3.75 to $5. Yeah, that's big, but it's the incremental moves along there that perk up everyone's excitement as far as to, hey, we're back in the game now.
Not only that, but your incremental steps have more foundation to them.
Sure.
In the market side too. You get that crazy volatility, it goes both ways. So
sure.
Whereas you build your nickels, dimes, quarters climbing up, you got a solid foundation usually before the bottom falls back out.
Yeah. So you're
look at me.
Exactly.
Pintail marketing.
You start packing that in there, and as you pack that stuff in there, you get to a point where stability's there. You got to have volatility to make money, though. You got to have some back and forth.
Right.
Otherwise, if it's going up, you make money every time. But if it's just like staying there, it goes at 425 and it kind of bounces back and forth, a couple pennies here and there. It's just is what it is.
Jerry wouldn't have bought the Cowboys without some volatility.
That's exactly right. Exactly right. And they've got plenty of volatility since he bought it. So, anyway. All right, probably good place to stop. Folks want to reach out to you, get some High Plains wholesale deal. What's the best way to do that?
Well, you can catch High Plains Wholesale on Facebook and TikTok, and you can catch me. I also share the same videos on my own Facebook and on X, Aaron Fintel. Call me or text me, 308-760-1193.
Right on. And you can find me anywhere you find a podcast. You go to Farm Journals, go to AgWeb, and you can get the on the podcast. You can listen to this audio version there. You can go to the YouTube channel, which is Farm Journals YouTube channel. You can see the video version there, and you can see anywhere that you want to go. They'll have all the information: Facebook, Twitter, Instagram, TikTok, all those places, either at Moving Iron LLC or Moving Iron Podcast, and you can see all the stuff there. Special thanks to Greg Machinery, Pete Peterson, Sean Hackett, and Aaron Fennell for being on this edition of the Moving Iron Podcast. So with that, I'm Casey Seymour. Let's go some iron, folks. Out.
Thanks for joining us. We'll see you again next week. And remember, Moving Iron is available on Farm Journal's YouTube channel and anywhere podcasts are found. So until next time, let's move some iron.